in Jiger Shah, old-time market guy, and of course, representing Key Meng is here with us to talk about markets. Jiger, thank you very much for your time. Good afternoon. What are your thoughts on the state of the markets right now? Do you think firm bottom is in place and now is a good time to start, getting into the stocks which you always liked and which are trading at lower valuations than you saw earlier? Or are you still relatively cautious given the fundamentals?
Good afternoon, Ajay. Thanks for calling me. I think the market doesn't really have a great deal of upside. The big upside came after the tax cuts, and even after that, I think we upgraded our Nifty target to 11,600. But I don't see a major sweeping upside from an index point of view or overall market point of view, though there are pockets of opportunities, and I would treat with cautious optimism out here because that there are headwinds in India as well as in the global market and economy. So I would say that companies with reasonably good visibility on earnings or say no scope for disappointments should be preferred, and more so on the large cap side. Coming to specific themes that we like are the top private banks, the 5-6 private banks which are doing better than the industry, software companies, telecom after the recent changes that have happened in the past few weeks, and cement. These are some of the areas which we think have decent potential even in the current market scenario, which doesn't look very robust from a point of view of stock picking.
Jigar, yesterday we saw a big up move in telecom space. This is a completely broken down space because of high competition, etc., and also debt issues. Today, of course, the news has come in that there is inter-usage charges which Jio has started to adjust. Reliance, which houses Jio, has started moving up, and other stocks are also moving higher. What are your thoughts on telecom space right now? The competitive landscape, do you see it relatively easing out?
Well, I think it was basically an indication that came when Reliance stated that they want to become zero debt over the next 2-3 years, and there could also be a possible monetization of stake in retail and telecom in mind when they said that. So I think profitability increase in these companies is very essential for them to achieve that objective. More importantly for them, now the subscriber acquisition has been done, and they should be now looking at consolidation and achieving expanding better margin and ROE, and therefore I think this decision is not surprising. It was coming, and this decision would impact the call rates, that is the voice, which was hitherto subsidized. So this if it happens on the data side, even in a little bit small manner, it will be a big positive for both Bharti and Idea, because they've been in a very bad condition over the past 3 years in terms of their financial performance because of the policy adopted by Jio, which was very aggressive. So I think this is a good start, and probably it will lead to a gradual improvement in the ARPU and reduction in the discounting practices.
Thoughts on auto space? Just moments back, say 5 minutes back, Suzuki, the global parent of Maruti, has cut their own income forecast for full year by 30%. And we all know how the numbers have been panning out here. What does your own channel check tell about how things are on ground for autos? How are you analyzing the valuation of beaten down auto names? And what's your view on how things could recover?
So just to particularly mention here that we have had a sell on Maruti for almost 1.5 years now, and the whole thesis is kind of playing out now, with the continued decline in the auto volume. I don't think Maruti is at any fault. I think the company is doing well in terms of its new products and preparation for the BS6. However, from our channel checks point of view, the passenger vehicle demand continues to be slow, and there are various reasons here. One is that there is a clear money supply shortage with the people on ground. So people want to either defer their purchases or not purchase, especially in rural areas. And in the urban, there is also a little bit of structural change in terms of people preferring to go by shared mobility option because of the congestion. So all of these issues are there, and once the BS6 comes up in the first half of FY21, we will also see prices going up. Although for petrol cars the price will not rise as much as diesel cars, but the cost of ownership is also hurting people, and despite of the fact that you have interest rates cut down, etc., things are not very comfortable. Then there is this lending issue, which is subsided to some extent but not fully, and dealers are having a major problem in terms of maintaining their business. So a lot of dealers are closing down. So all of these issues are there and they are not going away in a hurry. So we think that for the next 3 to 4 quarters, it is going to be tough for any of the segments, whether two-wheelers, cars or commercial vehicles, to do much better recovery. There could be a slight recovery in the second half, but not a major recovery. And the first 6 months of FY21 will be challenging because of the BS6 migration. So I think the next 3-4 quarters will be challenging for auto companies and auto part companies. Tractors may have a recovery because their interest rates have come down. It's a priority sector loan and the monsoon has been good. So there can be a cyclical improvement in the tractor demand.
You focus. I must congratulate you, Jigar, for that brilliant call on Maruti. But I would like to get your views on private sector financials in a moment from now. IndusInd, we all know what has happened in the last couple of days. Some specific pressure had come in, and now the numbers lie ahead today. My colleague Varun is here to talk about what to watch out for in the numbers, and then we'll talk with you about private sector financials as a pocket. Varun?
IndusInd Bank's going to be announcing the Q2 results today. There's 3 things really you got to look out for: growth, asset quality and margins. Now on the growth front, everything looks quite solid. Loan growth should come in at 28%. Deposit growth should also come in the early 20s. As a result of that, you're seeing NII jump significantly, as well as PAT, as well as PPP. Now these numbers aren't entirely comparable because the Bharat Fin inclusion has recently happened. Now on the margin front, NIM should have gone up given the corporate tax rate cut as well as inclusion of Bharat Fin, which has higher NIMs. But due to overall lower yields, these NIMs have also compressed a little bit. So NIM should actually come in flat for the quarter. So barring that, everything else seems quite positive for the stock. On the asset quality front, we'll be looking at the recovery trends in the CV book as well as stressed corporates that have been receiving ratings downgrades. IndusInd Bank hasn't corrected that much compared to a lot of other banks from the marquee pool, so asset quality will be a key monitorable. However, given the streets closing yesterday, the stock actually closed 5% up, and overall outlook seems to be quite positive, so we expect a decent outcome today. We'll update you once the numbers officially are out later this afternoon.
Jigar, what's the call on private sector financials? The 3 pockets, PSUs, which are called attractive, but numbers are still shaky, the expensive private sector banks, and the NBFC space. Do you see some value emerging there?
Well, I would still, pick my bet on the expensive private sector banks because there lies the safety, and these banks, due to reasonably strong loan exposure to the retail, also excellent asset liability matching, and overall strong governance, fungibility being very strong, ability to raise funds. They are really doing well. They are actually capturing market share because of the weakness in NBFCs as well as in the state-owned banks. I think more or less that situation will continue, and the reason is not very difficult because we are still seeing a lot of instability in the financial system caused by sporadic events over the past 1 year, and that shows that we are not yet at a stage where the economy has stabilized, and therefore I think some of these pockets will keep struggling, and the private sector banks, the top 5 6 are still the best placed to make the most of this situation, and any major recoveries from the IBC that will be positive for SBI, BOB and other state-owned banks, but one needs to still watch out for that because these are lumpy. It's difficult to forecast the exact timing. So I would still say that those are the best bets. And of course, then you have HDFC and Bajaj Finance and some of the insurance companies. These are other pockets which are reasonably solid, though expensive, but that is an area where the allocations will remain overweight, in my opinion.
Jigar, very quickly, if I could just get a word from you, how did you observe this entire India Bull Housing LVB issue panned out? The day they announced intention to merge, we broke the story. We questioned that on what pretext are you sounding so confident? And they gave their reasons. And look how RBI has rejected that proposal, and they're still saying that, we'll focus on our core business, etc., all of that. But did you, or did you as a market participant think that the way things are, they would have gotten RBI's nod for this merger in the first place?
Well, we do not cover India Bulls, so I do not have a specific comment. But in general, I believe that RBI has seen a lot of issues in the banking sector over the past 3-4 years, and in particular, I think RBI would be very, very careful to make sure that the kind of confidence that everybody poses in RBI and their credibility, which is the highest amongst all institutions in India, most respected. So they would be very careful in allowing anybody, and perhaps they would have thought that in the current environment it might not have been the best decision. So I think the best answer will be with the apex institution, but I would think that they would have chosen that in this environment they want to be very careful and not let anything that affects the system or the confidence of the various stakeholders.
For that, Jigar, thanks very much for joining us on the show.